on and get in Shibani Kurian, who's the head equity research and fund manager at Kotak AMC. We're going to discuss the latest note on the chemical sector and a lot more. Shibani, good morning. Thank you so much for joining in. Well, in this note, you're talking about how big of an opportunity the chemicals industry could be in terms of growth going forward. The data given suggests that India has seen a market share of 2% in 2003, which has just risen to 3% in 2023. That's basically 1% gain in something that we've seen in the last 2 decades. What makes you so hopeful that the next decade could be for India? Because now we have the tariff issue looming, and China, despite all the shutdowns, has always been the leader in chemicals industry. Even Europe is not far behind. So what's making you so optimistic here?
Hi and good morning. So you're right. When you look at India's market share today in the overall global chemical construct, we are at about 2.5 to 3%, while China, of course, is the leader by far at about 40%. Now, when you take a step back and look at what has happened in the chemical space, maybe over the last 3 years or so, two factors. One, global demand has slowed down because of macro factors, and that has led to destocking. And of course, China, having a significant capacity, has been dumping in terms of the global export market, and that had led to significant price correction as well. But now when you look at what's incrementally happening and why we are positive on the sector, one, after a period of muted growth, now there are signs of stability. Also, as far as pricing is concerned, there is a big change that is taking place in China, which is called the anti-involution policy. And this policy essentially aims at curbing overproduction, focusing on quality over quantity. And this, over a period of time, should also help in terms of reducing the pricing wars. Now, you're right that India, in terms of market share, is still fairly small in the global chemical construct, but India has also built significant capacity and capability as far as specialty chemicals go, and that is where we believe that there is potential for the country to gain market share, especially as the China Plus One strategy plays out over the next few years. And hence, if you look at today, the chemical space in terms of valuations, the sector is trading at multiples in comparison to its own history, where multiples are attractive. We are now seeing signs of growth stability come back, and hopefully growth should improve from here. Pricing wars also should start to abate. And given the fact that there is a significant amount of capacity building that has been done as far as India is concerned, India remains fairly well placed to incrementally gain market share over the next few years. So it's a fairly medium-term construct for the chemical space.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.